Welcome to the Dealmakers Podcast. The Dealmakers is a platform for leaders in the commercial real estate industry to share their personal stories, business insights, and industry secrets because we believe in spotlighting the real people behind the deals. This podcast is brought to you by Agora, a comprehensive real estate investment and management platform offering a wide range of services to enable real growth and provide the best real estate investment experience both for GPs and LPs. I'm Asaf Raz. Let's go. And today, long time waiter for this guest. We're actually I just said it to you before, Sam. So this is Sam Morris, partner at Lone Star Capital. I think, the person and the company kind of speak for themselves. This is an extension for season 3, just because there was a lot of interest to hear from new people. And hearing from you, Sam, from Lone Star is just a huge privilege and an honor. So thank you so much for joining me today. And tell us more about yourself.
Asaf, man. Yeah, thanks for having me on, bud. Really appreciate it. So, my name is Sam Morris. I'm a partner at Lone Star Capital. So we're actually based in One World Trade Center, Manhattan, but I physically am in Houston, Texas, where we have all of our assets. So we have a little over 5,000 units locally here in the state of Texas. We focus specifically on workforce housing here in Texas.
I love that. And I also see that you're, so again, very transparently and openly, I've known Lone Star Capital for a long time, been following what you guys do, and just always really exciting to see a real estate company that really leans into social media, marketing, really bringing out those information outwards and very openly and transparently. Can you tell us a little bit about Lone Star Capital? What do you guys do? What do you focus on today? Just to give us some more of an idea of the business.
Yeah, the firm started in 2018. So our founder, Rob Beardsley, is the one who started the firm at a very young age. Rob's still a very young guy. My connection into the firm started really this year. So we merged my company, Sunset Capital, in with Lone Star Capital earlier this year. And so I'm kind of the gray-haired guy of the group, to be honest, and been doing this for a while. But we have kind of a sole focus that we do, which really is, we have a fairly specific investment niche, which is workforce housing in the state of Texas. Like I told you, there are markets that we look at. Primarily, we stay in the primary markets, though, of the state. But we kind of will look a little bit all over, really, as long as it hits our size and our scale for what we're looking for. There's one market that we are peaking at right now, I would say outside of the state of Texas, which would be our first foray outside of the state, which is Phoenix, Arizona. Love it from a city. It's tough to own right there right now, but it's an area we are keeping our eye on because we think there's enough opportunity, maybe not this year, but in the coming years, to make some money in the multifamily sector out there. And so, as far as growing it and things like that, we're still actively out there looking at deals. We'll put offers on deals, I would say almost every single week. But it's still got to kind of fit our niche buy box. And we've had a lot of success, I would say, in the last, call it 12, 24 months, bringing affordability components to properties in the form of tax abatements. And that's actually been extremely helpful from maintaining cash flow and really just building the NOI of properties here locally in the state and working with housing authorities to be able to do so.
I love that. And I'm a little bit later in this episode, we're going to deep dive into, there's a macro environment that we need to look out for, and then to understand how does a company like you put in an offer for a deal. You said almost every week for a new deal. So like, how do you make that happen? How do you do that in this type of economy? But I do want to dive a little bit more about you, Sam. Like, how did you get into this? You were a chief investment officer in Rockstar Capital. You started in banking, right? You told me you started in banking. Before that, how did you get to this position? How did you get to actually working in real estate?
Yeah, it's kind of funny. I started right out of college. I started in banking, and I started learning how to underwrite deals. I mean, that's really what I was doing. I was underwriting deals all day, every day for years. And not just multifamily deals, but all types of deals. So all types of commercial real estate deals, all types of business deals. And I would say probably by the time, I tell people probably by the time I was 25, I'd already logged my 10,000 hours kind of thing in underwriting, knowing how to underwrite deals. And it was shortly thereafter that, because I was in a small bank environment, I learned how to start raising money. And I was raising money for banks at that time, right? Because that's what we were doing. We were raising money for our bank so that we could build the liquidity of the bank, so we could build the size of the bank.
Mm-hmm.
And I joke around and tell people I was raising money before it was cool, kind of thing. And it was one of those things that, when you learn some of these skill sets, right, it helps build, it's the stepping stones to get you to where you are later in life. But right around 2007 is when I first made my first investment into an apartment complex. And really what it was is I'd seen how all these other guys were making money. I had the financials right in front of me, the tax returns. I had it all right in front of me, so I could see exactly how much money they were making. I had their business plans, so I was able to see what they were doing to the properties. And then it was just communicating with enough people to go, who are the real good operators out here? And so I made my first investment in 2007 into a multifamily property. And then did not look back from that point. Started as an LP, like a lot of people do, and quickly got onto the GP side of things, a few years later. So
I feel like this skill of a lot of really successful people that I know, regardless of the field, if it's real estate, if it's anything else, they always start from the basics, and they have, you gain so much knowledge. For example, from underwriting, I know so many people that started at underwriting that really helped them understand how to evaluate a deal. And then like this flow into being able to fundraise to a deal. If if the numbers make sense, you'll definitely know how to fundraise for it, because usually when you know the numbers and they make sense, it's a little bit easier to do that. How did that transition work for you? Because I know underwriting is a very technical skill. It's more of understanding the real estate. How do you shift that to be able to raise capital? I think we have a lot of listeners here that are looking to make that shift, and really trying to understand how that worked for you.
yeah, I mean, so what having that technical skill, right, and really the mastery of that technical skill, it gave me the confidence from the sales side, right, which is really a lot of what raising money does, right? You're selling. Excuse me. Ooh. Yeah, you're selling, right? That's what we are. And those who can sell typically make the most amount of money in any industry, right? If you're the salesperson, you're going to make good money doing it. But from having the confidence and understanding the quantitative side, it led to learning more of the qualitative side and being able to sell a lot easier that way. And so what I would tell you is, I would get a question and I knew the quantitative answer for it, but being able to articulate it and convey it in a message to where an investor would understand it too was another avenue that took time to learn. I mean, that wasn't something that was done overnight.
Mm-hmm.
And when you were raising money, call it pre-2012, which is when the Jobs Act passed, right? Because when the Jobs Act passed, that's when you were able to raise money on social media and everywhere. And it was, everybody could go raise money anywhere. But prior to that, you really had to have a substantial relationship, and it was one by one. You were doing things that were not scalable.
Mm-hmm.
You were shaking hands and you were communicating directly with the investors. And I had just years and years of practice of that prior to, people being able to sell to the world that way.
Yeah. I love that. I love that transition. And I think if anybody's interested in making that transition, Sam is definitely the person to talk to. Also a very active on social media, and a super nice guy, as you can see. So I think you definitely can reach out. And if Sam has time, he's going to give you some tips on how to get that done. And with that, Sam, I'd like us to shift a little bit to the real estate itself, right? And I remember when I started this podcast, the entire topic of conversation was interest rates and office is dead and a bunch of these big titles. Small shops are not going to make it. There was a lot of negativity, and I always try to bring in the positivity outside through these episodes, because people are making deals, people are making money off of real estate. It's not like market continues to move, especially when it comes to multifamily, where people always need a place to live, and housing costs they keep going up. So it just makes sense for people to rent more. But I think for me, the interesting piece is that the conversation changed from interest rates to, what's happening with the macro economy, what's happening with tariffs right now, right? It changes the game a little bit. How does Lone Star Capital, how did you prepare / how are you reacting to these market changes and shifts as they continue to occur? Almost every month, something new comes up.
Yeah, you just said it right there. Something new every month comes up, right?
Yeah.
But what doesn't change in that scenario? Because you mentioned it, it's the you know resident still needs four walls and a roof. That's just not going to change. People are going to need shelter, no matter what's going on in the economy, no matter what's going on with interest rates or tariffs or the political environment or whatever macro thing is going on. It still comes down to you're fulfilling a very basic need
Hmm.
for your residents, right? They need their four walls and a roof. And so if you, I don't want to say ignore the noise because that's not what you would do, but boiling down to some of the simplistic forms would be I'm going to take care of the resident, right? I'm going to make sure that the water works, the AC works, that there's no leaks, and I'm gonna provide good quality housing with great service for my resident. And the rest of the stuff that goes on, the noise that's all out there, it kind of takes care of itself from the standpoint of I still have a great resident and I'm providing them great service and a great home to live in. And because of that, I'm normally going to be collecting money from this great resident because of the things I'm providing. You can boil it down to some of the very basics, and you don't have to worry so much about what's going on in the macro from that perspective. Now, do you worry about some of the things that's going on in the macro, and can that impact your business? It certainly can. It's one of the reasons we focus or we like Texas so much. One, it's a landlord friendly state. Like, I mean, it can't get any more specific than that, right? Um, it's a high growth state, meaning we still have people moving here, and the in-migration into the state is still fairly substantial. And part of the reason for that is we still have job growth here. So as jobs continue to grow, so do the people coming in to fulfill them, right? And so if you're looking at things from a macro level, there's other things I would probably focus on instead of all the negative news stuff that's out there. And yes, do we have tariffs and do we have things that are going on politically that can cause 1,000 point swings in the market? We do, but when our focus is on our niche, which is workforce housing here in Texas, you know, we have a different focus in mind because it's with that resident in mind, right? It's great that all these other things can be going on, both positive and negative. But if our focus stays in on how do I provide just great housing and great service for our resident, um, normally everything else falls into place pretty simply.
Is it, have you seen any, um, these 1,000 point swings that happen in the market? Has that, you think, or you felt, shifted the mindset of LPs who are currently
For
looking?
sure.
Yeah. So tell us a little bit about that trend and what you felt with where the capital is flowing.
Yeah, I mean, if you have just go about it right. If you have LPs that have exposure into the market, and all of a sudden, they feel that the liquidity of that market is shrinking for them, it impacts their bottom line, or their numbers don't have as many commas in it, or whatever it may be. Um, yeah, there's impact associated with that, and there could be a hesitancy to pull the trigger on something
Mhm.
new, or there could be a reallocation that they may want to look at, things of that nature. Absolutely, that's a real thing. Um, but realistically, what it is, we have something that doesn't, have these kind of daily swings, if you will, right? I mean, real estate, and really in no area of real estate are you going to have these kind of wild up and down swings. But the trade-off for that too is we don't have the liquidity of a market the way the stock market is, right? It's a fairly illiquid market when you're talking real estate, and that's both good and bad. And so uh, it's good from the standpoint of it can protect a lot of investors from themselves, right? And making emotional decisions based upon wherever the market is, at that moment. And it can be bad from the standpoint of it could take us longer to get to the liquidity of a deal versus, you could sell, a stock today kind of thing.
Yeah.
Um, but yeah, I mean, absolutely, our LPs conscious about what's going on and how it's impacting them? It obviously it impacts different LPs differently depending on the exposure that they have in the market. But um, they're listening to some of the noise for sure.
Has that impacted your fundraising strategy or any strategy that you're working on today? Any of your, I don't know, your current fundraisers, your current bids that you're putting on deals, has that affected anything directly or immediately, or is that still a long play?
It's still a long play for us. I mean, I would tell you, we haven't closed a deal since December of last year. So, and I know we're April right now, so I know that may be not a long time for some people. For us, it has been a bit of a long time, and uh, so we haven't gotten anything to the finish line or under contract, which we brought forward to investors yet. So the verdict's probably still out a little bit on that, but I will tell you, with the conversations we're having, both internally and with our investors, there is still appetite for our next deal. Um, and it may be not our next deal that we see that, but it could be the deal after that, as we start going down the line. And so, do I think we're going to have impact for it? For sure. I mean, it's almost impossible not to. Um, how that's going to um, rear its head, I'm not really sure just yet, but I know it has not slowed us down for what we're looking for, or how we're looking to do deals. We're still pretty disciplined in what we're looking for, and we're not going to change that just yet. Now, if all of a sudden we fall on our face on a capital raise, we probably would reevaluate it. But there's nothing that tells me we should, you know, break from the discipline that we have right now.
Don't change. Don't replace a winning horse. They say, right? So what I'm trying to understand is, and you talked about the gap. So you used to close more deals, prior to this, I don't know, the past few months, right? Is the slowdown of closing a new deal because you're scrutinizing more when you underwrite a deal, or is that just because market conditions just don't allow you to make the investment decisions that you have done before? Is that like being more specific into the deal metrics? How does that work?
No, there's actually, believe it or not, there's been a tick up in competition for us right now.
Wow.
Yeah, which is, yeah, I know that's probably a little contrarian than what a lot of people are hearing, but we've been the bridesmaid at a few deals. It's probably the easiest way to say that. And so that, I mean, to me, that's actually a good sign. It means there's more and more players that are starting to wake up and go, look, we got capital to place, and there's some deals here that are now hitting metrics that we're getting closer to. And I would actually say the bid ask spread, at least locally here in Houston, has been shrinking. Dallas, I still think, is probably one of the most liquid markets in the entire United States. There's people from all over the country that want to go there. As far as San Antonio, I would say it's a little flat. And Austin, it might be, Austin's got some time before I would say you'd want to put some money there. But Houston definitely has been recovering and quickly, and it's a supply demand thing. They've chewed through, the bulk of the supply that's been added to the market. So we see Houston just recovering faster than any of the primary markets in Texas, and still pretty bullish this area. And so, but that being said, we're starting to see more deals hit the market, so we're able to take more stabs at things. But yeah, it hasn't changed. We haven't changed our discipline at all. It's just we haven't been able to knock down the deals as fast as what we've wanted.
Awesome. I love that. So usually what I do at these episodes, first of all, we focus a little bit on the real estate. We focus on how are you playing your game with multifamily. What I try to do is, and I'll cover just two more things. One of them is a little bit about, I really want to understand a little bit more about what's happening with competition, because it's just a surprising element for me, right? Because you just continue to hear that things are not moving as fast. So I'd like to hear more about that. And then at the end, we do something called the Shameless Plug, which I think the name speaks for itself. That's where you get the opportunity to actually talk about what you're doing and what you're looking for today from the community. Does that make sense?
Yeah, sure.
Perfect. So let's dive just for a couple more minutes about the competition. And this is specifically interesting for me because, and you talked about this literally a second ago. People say that the market is slowing down. People say, that things are a little bit unstable. But when we look at the reality is that people are back in the game. I'm trying to understand how does that work with each other? And I'd love to hear more about what you're seeing the competition doing right now to gain this edge.
Yeah. So what I can tell you, I'll give you our last deal that we just lost out on. I mean, we did not win the bid on it. It went to best and final. I believe there were 16 initial offers on the deal, local deal here in Houston. We went to best and final. We went slightly above ask on the deal with hard money day one. Um, and there was another group, I would say Texas group that came in and they flat out just beat us. It's probably the easiest way to say that. But in that best and final, I think there were 7 bidders in the best and final for this particular deal. So look, good real estate doesn't go out of style. It just doesn't, and it really doesn't matter what's going on in the market. Um, so if you have a great product in a great location, um, there's always going to be a market for it. And in this case, there was, and somebody came in, and we were we were really hungry for that deal, but we just got outbid. Probably the easiest way to say that. And look, no matter what deal trades, right? In particular, talking with those investors or the fund managers, it's typically, I mean, I would say 99% of the time, it's going to be the highest price gets the deal, right? So it's, if
100%.
there's a deal out there, it's still going to be whoever's willing to pay the most. That's who wins the deal, right? And so the dynamic of where people are saying, hey, deals are dead or anything like that, I would tell you the volume has picked up tremendously compared to, say, even last year, as far as what's available out there. And whether it's people testing the market, whatever the reasons may be, whether it's distress, whatever the situation may be, interest rates are not at the same spot where they were last year, right? So you do have, although we've had tremendous volatility the last few weeks in it, you do have some people that are looking at debt, and they're finally starting to see that they can come get positive leverage in some of these deals, and that begins to make a lot more sense for people, right? You have people that are looking to hold maybe even longer term as part of their own pro formas. That becomes more, makes more sense for a lot of people, and you'll start to see equity that just has to be placed, right? Some of these funds are going to expiration and they need to be placed into deals, lest the money just gets returned back to the investors. And so you see a lot of different things that way. And I would also tell you that there's a sense, and particularly in the multifamily world, that a lot of people think that we've hit some lulls, that we may be at the bottom in some cases. I'm not calling that. I will tell you, it does feel, I made comments the other day, it feels a little bit like 2010 to me.
Wow. Wow.
It's a while ago now to think about it, but during that time frame when we were investing, it was somewhat scary. Meaning, we were a little nervous. Or is this the right pricing? Is this where we should jump in? There was a lot of uncertainty in the market, but you look forward 2-3 years from when we did that, and you go, man, why didn't we buy everything at that time? I'm not saying that that's where we're at. It just feels that way to me, that we're kind of in that 2010 time frame for me.
That's amazing. It's such a great insight, because while I was having all these conversations, it was like the market conditions are nothing like 2010, right? But when you look at the reality, I feel like the emotion towards buying real estate right now, like you said, feels the same. And as you said, history shows us that usually in these times people make a lot of money, right? So it's just interesting to see your perspective on this, and hearing that there's competition. Really, it's always a positive note for me. I love real estate. I love when people make deals. As you said, it doesn't go out of fashion if you have a really good property. So I really like that. That's a really good insight, and I really appreciate it, Sam. For the last piece of this podcast is, like I said, what we're doing is the shameless plug, and that's your opportunity to shamelessly plug in anything that you're doing right now, or anything that you're looking for. If it's co-GPs, if it's new LPs, if it's properties, if it's brokers that you need properties from, anything that you're looking for, this is a great opportunity. We've had a few great connections happen behind the scenes here after episodes were posted. So take it away. Feel free, as shamelessly as you can.
Yeah, I would tell you, we are constantly looking for more equity, and I would tell you that's a challenge for a lot of operators these days. But one of the things that we have to offer too is the stability that we have when we do our deals. So those that are LPs or fund managers that are looking for great cash flowing deals, we're a great outlet for a lot of those groups. And so, to find out more about us, lscre.com. So that's Lone Star Capital RE.com. And you can learn more about our company. Myself, Craig, or Dasha would love to talk to you guys, and we can connect that way and see if we can partner up on something that makes sense for everybody.
I love that. So, Sam, thank you so much for joining me today and sharing your valuable insights and experience. It was truly enlightening to hear your perspective on the real estate industry and your journey within it. To our listeners, thank you for tuning in to another episode of the Dealmakers Podcast. If you enjoyed this episode, be sure to subscribe so you never miss out on the latest conversations with industry leaders. Stay tuned for more exciting episodes as we continue to explore the stories behind the deals and the people making them happen. I'm Asaf Raz, and we'll see you on the next episode of the Dealmakers Podcast. There we go. Sam, thank you so much.
Asaf, man, really appreciate it, bud.